A number of telltale signs have us recognizing that the Walt Disney Company is not having a good September. Now, while these may be out in the mainstream press, they are probably not being pressed in such a way that lets the average consumer and reader of content know that these are the signs of desperation from Disney. However, we're going to break it down for you. You be the judge as we show you why the mouse is wishing that this September would end. All right, ladies and gentlemen, boys and girls, welcome back to another video of excellence here on the WDW Pro channel as we endeavor to explain entertainment and keep you ahead of the culture curve. We shall not take a moment more before we do so, so let's drop into this article out of Variety by Todd Spangler. Disney Plus deal. Ad plan available for just $2 per month in limited time promo. This coming out on September 6th. Yes, we're a couple days behind on this one, but the news has been fast and furious. Disney is offering a significant discount on the ad-supported version of Disney Plus as it looks to drive up subscribers for the package before the end of the current quarter. Now, that's important. We'll come back to it. Starting September 6th and running through September 20th, new and returning Disney Plus customers in the U.S. can subscribe to Disney Plus Basic for $1.99 or $1.99 per month for 3 months. 75% off the regular price of $8 a month. The offer is available to eligible customers at DisneyPlus.com. The special promo comes as the price of Disney Plus Premium is set to jump 27%, rising from $11 to $14 a month for U.S. customers as of October 12th. At the same time, Disney is aggressively trying to push customers into streaming bundles. On September 6th, it is also launching a new ad-free bundled subscription plan with Disney Plus and Hulu for $20 a month, a 37% discount off the plans sold separately. Now, that does matter. Here's what's really going on, folks. We have been watching now for 3 consecutive quarters as subscriptions for Disney Plus in North America have dropped. That is no good for the mouse. That is the lead market. It has the highest margin of profit per subscription plan. And not only that, but because it is the lead market, what happens in North America tends to then take place in Europe and then domino effects to other places. And we believe actually that this is being felt in Europe because we've also seen this sort of a campaign ramping up in European territories as well. So what is happening here with Disney Plus is that, just as was mentioned by Todd Spangler, and thank you, Todd, for being so forthright about this, this is to drive up subscribers for the package before the end of the current quarter. What quarter are we talking about? We're talking about the current quarter in which Disney measures its fiscal year. Now, this will be what is reported in the next earnings report to investors, although notice, too, that Disney has made it more difficult to provide these numbers. But should they be provided at all, we will see these numbers when they come back to the next earnings call with Bob Iger, and we will have those numbers based on whatever Disney Plus ends with in September. Now, that matters because the stock price, the stock value of the company largely is impacted by those subscription numbers. So by offering this extraordinarily low number in September, they're trying to drive up subscriptions, even despite the fact that for $2 a month, for the first 3 months, that is not a significant profit-driving machine. Now, another question is, do you think that they're going to hold on to those subscribers after those 3 months? Disney doesn't care in this case, not greatly anyway, because they're trying to get the number for October. They can come up with another plan to try to salvage the quarter forthcoming. That's not their deal right now. Their deal right now is save the stock price at all costs. Folks, we watched as Disney dropped below $80 per share yesterday for the very first time in a decade. It is a massive number to drop below because of how many of those automated buy and sells were likely taking place. Many people out there, many institutions likely had an action in place should Disney drop below 80 or hit 80. And so for a stock to drop below one of those big numbers would, it takes some effort. Now, why does Disney care so much, though, about the stock price right now? Why do they care so much about the quarter? Well, let's talk about this. This out of Reuters, again, the same day on release, Helen Koster and Samritha A, not sure what the A stands for. Maybe it is the full last name. Who knows? Stranger things have happened. But Comcast moves up date for Hulu deal with Disney to September 30th. We're going to fully explain this in just a moment. This is a big, big deal. Comcast has moved up the date for the sale or purchase of its remaining stake in Hulu to Disney to September 30th this year. Remember that this was supposed to take place at the end of the year. CEO of Comcast, Brian Roberts, said on Wednesday, as of September 30th, after some short period of time Disney can call, we can put, and I believe that's what will end up happening, Roberts said. Shares of Comcast extended gains were trading 1.7% higher. Boy, wouldn't Disney like that? Can you figure out who's winning this, folks, based on the stock, based on the movement? No financial advice being given here, by the way. We're not telling you to make any decision with any stock, period, ever. But can you tell who's winning? Define weakness in the broader market. Roberts made the comments at the Goldman Sachs Communicopia Plus Technology Conference. Disney owns 2/3 of Hulu, while Comcast owns the rest. Under a 2019 agreement, either company can trigger a sale or purchase of Comcast's 33% stake to Disney as early as January 2024. Remember, end of the year, that's when this was all supposed to start beginning. The agreement ascribes a minimum equity value to Hulu of $27.5 billion. Also want to say here, folks, that we believe that Disney always knew they were going to have to do this because we have had, let's put this in the rumor territory. Let's do this to do the disclaimer here. This is rumor and speculation. We believe Disney, based on leaks that we have seen, we believe that Disney has always going to have a path where they were going to put Hulu as a blade, a category, major category called a blade inside Disney Plus. So we believe that the work has already been completed, essentially, to integrate Hulu into Disney Plus. They just have to hit the button, and then the patch goes out. People download this new version of Disney Plus, and Hulu's in there. We think that work's already done. Now, the agreement ascribes a minimum equity value to Hulu of $27.5 billion. But folks, Comcast is arguing, and as of this point, we probably believe that number has been finalized. Arbitration was taking place for these two companies to figure out how much that third that remained of Hulu was worth. But Comcast was arguing it was like $30 billion in excess of the total equity value that was set as a minimum. So Disney was arguing that it was worth something like 12. Where does that land in the middle of arbitration? Well, we don't know for sure, but it likely doesn't land on either of those numbers. If it lands somewhere in the 20 range, then that's a big deal for Disney. Let's come back in just a moment to why Disney is trying to get those subs up, why the stock matters so much in this. But let's read the rest of the article. And folks, if you'd like to read the full and complete versions of these articles, make sure that you click on the links in the video description, and we'll get you the ability to read these. We highly recommend them. Roberts said the companies will go through an appraisal process, that's the arbitration we talked about, to determine the value of Hulu. And that process appraises a lot more than Hulu in his opinion. That's interesting. It really tells you their stance. They are trying to get as much out of this as possible. And Disney's in a position where Disney is going to have to pay. Disney has spent, gosh, what would it cost to integrate two giant streaming services, one into the other? $1 billion? Wink, wink. Beyond valuing Hulu as a standalone business, Roberts said, he believes the benefit for a buyer in terms of reducing churn, as well as providing possible synergy with other services, could be worth $30 billion. That's what we just told you, folks. I didn't know that was in the article, but there it is. The value of Hulu has increased dramatically, said Lightshed media analyst Rich Greenfield. Hulu is far greater value than when they struck the $27 billion agreement with Disney. Comcast wants to get maximum value out of this. Hulu had 48.3 million subscribers at the end of the most recent quarter, compared with 24 million paid subscribers for Comcast Peacock streaming service and 105.7 million global subscribers for Disney Plus. Although let's say, folks, that 105 million global, not comprised totally of solid subscriptions. If you've been paying attention to India very much, you know what we're talking about. In terms of the domestic side for Disney, that's where they're losing those subscribers majorly, and they need to stop the bleeding. Now, how does this all tie together? Well, we are here to explain that. That's why you come to this channel. That's why you're watching this video. Here's what's really happening in our estimation. We believe, and we're talking about all of the experts who work for That Park Place and That Park Place News Network, we believe that what is causing such strife and causing Disney to have to do whatever they can to drive up those subscription numbers and thus save the stock. And the reason that Hulu is now going to be transacted upon much earlier than previously estimated is because as Disney's stock drops, the ability of Disney to purchase Hulu becomes more and more difficult. Now, it's going to happen. It will flat out happen. but it is more painful the longer this goes on. And the longer the stock drops, the more painful it gets, because Disney needs to use the value of their stock. They're using stock options to purchase Hulu in part. And the longer that the value of the company drops, the more significant in terms of the percentage of the value of Hulu compared to the percentage of the value of Disney, that ratio goes far and far more into a disadvantage for Disney the longer this goes on. Now, if Disney were a company in growth mode, if Disney were in a company where their stock was increasing in value, then they would want to hold this out as long as possible, because their stock would be worth more later on, and it would become easier and easier to buy Hulu at a level, by the way, which is far greater, far in excess to what Disney wants to spend. This is way, way out of the realm of what Disney wants to spend. So much so that Iger tried to step away when he first came in as CEO, and I think he realized he couldn't. It was too late. So if Disney were in a growth mode, Disney would hold off. If Disney were standing, neutral, let's say they didn't think they were going to grow, they didn't think they were going to decrease, etc., then Disney would be okay with just staying with the plan as was set before previously. The fact that Disney is pushing this as soon as possible indicates two things to me. One, they think that they are going to shrink in terms of their purchasing power, and thus they need to make the purchase right now. You might think of this like somebody who knows they're going to lose their job in 6 months, but they really want to buy that house. So they go to the bank and they present their annual income from the job they currently have, full well knowing they're not going to have it in 6 months, but they hide that from the bank. I'm not saying that Disney's hiding anything here, but that's an example. My best analogy of why they would want to buy now and not wait. The second thing that I think is happening here is that Disney is looking at the situation they have with Hulu, and they are realizing that the longer that they hold on to this deal, the more uncertainty is inserted into their stock value. So investors now are keyed in on just how much Hulu is going to cost, but that number still remains ambiguous. Disney, if they announce that they're purchasing it for $20 billion, that's bad. But investors are spooked right now that it could be 30. And so better to go ahead and say, we thought we were buying it for 12, we're buying it for 20, we're buying it for 24, whatever. However much hurt this is going to bring, that's better than the ambiguity of investors being scared to death that this thing's going to cost so much that Disney is going to be largely crippled going forward with the amount of debt that they have. So that's what's going on. And that's why we're seeing these sorts of things. Now, yes, we've reported on the fact that Disney has hired a crisis management team that's permanent and that's internal. Yes, we've reported on the fact that Disney has brought in general legal counsel into the Disney Parks division, and that reports directly to the top and escapes having to report to the division itself, which is very strange unless you know what's going on. All of that, though, I think is separate from this. All of that has to deal, I think, with the parks issue, specifically Disney World, and all the ramifications of what's going to go on with the investigations in Florida. This what we're dealing with right now with Hulu, this is separate. With the Disney Plus subscribers, that's separate. Although perhaps if Disney believes this is going to drive their stock really low, perhaps you would see that internal crisis manager come into play and try to help Disney present the best possible messaging for the situation ahead. But that is why the mouse is hoping that this September will please end. Please end September, says Mickey Mouse, because Disney has major things that they need to accomplish. And none of them are positive for Disney, except I suppose when they finally just go ahead and buy this third of Hulu, maybe that will make them feel a little bit better, because it's going to sting. And maybe having that sting be over with would be a positive for all of them, as then they can move forward and try to figure out how in the world they are going to make some money off of Disney Plus. We'll talk about all of that coming up, but for right now, just know the two things are they want those subscribers because they've got to stabilize the stock value. They've got to stabilize the stock value because the transaction begins to occur at the end of September, but that's not going to be over at the end of September, and that stock needs to hold steady. And then number two, they've got to get the Hulu deal done by the end of September, because it's not doing them any good at all to let it sit. And not only that, the final point in this video, folks, Disney needs to get this Hulu deal done, because guess what? It's also part of this last fiscal quarter, and Disney definitely needs to go into the next fiscal quarter with certainty, with understanding of just how bad this is going to go. Nothing, in my estimation, is positive about what Disney is going through right now, And we still wait for a time in the future, sometime, someplace, some way, where Disney will finally get out of their own way and start making good decisions and get back into a growth model. Right now, they're not there. If you'd like to see why Disney is not in a growth model, go read that CNBC article, the fantastic CNBC article that covers just how immature and how lackluster the leadership has been at Disney. It is shocking even to those of us who have covered it extensively and who have been right with the high resolution and specificity of what is brought through in that. It is just unbelievable. Maybe you out there would like to read it and find out just how badly those leaders at Disney need their 2 showers a day and their chance to pet a hippopotamus. All right, folks, thank you so much for a fantastic day yesterday. We had probably the best live show that we have ever done, the Pro Show Live. If you've not yet seen it, go watch it. We laughed. We had such a good time. We broke down the what's going on in the entertainment industry. We talked about one of the best movies of the entire year, so positive news as well. You got to go watch it. We had a great time. I want to say a special thank you to all of those who were in the live audience as well. Just such a kind and great community that we have built here, and we really are so grateful for each and every one of you out there. You are the lightning that powers everything we're doing. We never, ever forget it. Folks, if you like content like this, consider clicking the like button, share, subscribe, and when you click it, you stick it to the algorithms. It's the notification bell. Drop a comment down below and let us know what you think. We covet your comments. We care, and we often respond. Tell us, do you think that Disney's going to pull this off well? Do you think that Disney will perhaps not even buy Hulu? Who knows, right? Crazier things have happened, but I will say that that's a 99.999, keep those nines going % chance that they got to buy it. All right, folks, wherever you are and whatever you're doing, keep learning, keep growing, and as always, keep having fun.
Clickbait, fraud, drama queen. Ugh, I wish there was a channel that was 5 to 6 minute news reads without the drama, frauds, and clickbait that could accurately let me know the current news, providing my crucial context utilizing all the different That Park Place contributors and creators.
Well, stupid, there is. It's the That Park Place YouTube channel, which will be going live real soon, so make sure you're subscribed, so you can really stick it to the algorithms.
You're joking.
Nope.